This is the London Fintech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman, and this is London Fintech Podcast, episode 59, and I have the great pleasure to be joined today by Wynne, Managing Director and co-founder of Smart Pension. In 2014, I hung out a lot in the fintech startup scene. So many moths, such a big flame. One of the insider trick questions in fintech is, name a success from all the fintech incubator/accelerator programs in London. Actually, to be honest, last time I heard people talking about this, someone did come up with one name recently, though sadly I've forgotten it, so I'll lose the game next time that question comes around. All of which is to say that the ex-ante chances of an individual fintech getting anywhere are roughly less than zero. And as for ideas, oh dear. So many people tell me they have an idea. Yes, we all have lots of ideas. There's an even bigger gulf from idea to business, perhaps, than there is from startup to business of scale. And then, from a business of scale, which the best fintechs have reached so far, there's a mighty gap to, what might we call it? It's actually quite a long time since I remember these things having hung out in fintech. It's coming back. Oh yes, that's the stage. Yes. The thing called a profitable business. Yes, where I think the revenues are more than the expenses. I'm not quite sure because I'm in fintech. So how do you win the lottery? How do you beat the odds of less than 0% chance of getting anywhere? Will is someone who in various incarnations, some of which we'll touch on in a minute, has gone not just from 0 to 1, as per PayPal founder and well-known funder of court cases Peter Thiel's book, but from 1 to 10. Or, in the case of Smart Pension, from 0 to 1, and then 1 to 75,000 in under 2 years. Falls off chair. Are you interested in how to do this? Would your fintech be better off for acquiring an extra 75,000 clients? Listen up, and the formula for instant fame and success will be yours. Terms and conditions apply. We can all read cookbooks, but not all of us are chefs. Plenty to talk about, so let's get on with the show. Hi, Will. Thanks for joining me today, and thank you for joining me in your offices, which are basically in the middle of Hammersmith railway station, as most people will hear.
Yes, hi Mike, thanks for having me. Apologies for the passing trains, but yes, very nice to be here.
Yes, and clearly one of the secrets of being an entrepreneur is that you get the very well-priced accommodation in the middle of railway stations. I can always tell people who are very VC funded because they've got smart offices. So, as I mentioned many times on the show, there's lots of thought leaders in the world and lots of self-styled entrepreneurs. Every term seems to get diluted to meaningless these days. You're a real entrepreneur, and I mentioned your Smart Pension, but when I was introduced to you, I was told that you do Smart Pension Arena Flowers, and I was wondering how you combine pensions and flowers, but maybe you can tell us all about that. And then something called a maze box, which I then also wondered in my cynical moments whether that was a porno site. We could actually stretch the definition of fintech, perhaps.
So yeah, my background's a little bit unusual, I suppose. I was brought up in Africa. My dad went out there to work for British Leyland. From the age of 1, I was brought up in Zaire. I went there just after the rumble in the jungle. And my dad went out there selling vehicles, and he did lots of different things. His greatest claim to fame was getting in the Guinness Book of World Records for creating the world's longest bus. But he was also quite a good political mover, and so he credited the president, Mobutu, with the invention. So when I got my copy of the Guinness Book of Records, it was him in there rather than my dad. But anyway, he did lots of interesting things out there. I then started in the city.
In the city in Zaire or in the city of London?
No. I did the city of London. So I worked for Credit Agricole and Suez, or Farming Credit, as my friends kindly called it. I did that 5 years. I did private equity, pretty interesting. I was grossly underqualified for the role, frankly, because normally it's an accountant who's been doing 5, 6, 7 years of proper work, ACA stuff. I got the job, very interesting, lots of boards, lots of sectors, lots of financial modelling. I found it a bit, they take a fee up front, stick it in the management accounts, monitoring department, and off you go, and then they go on to the next deal. It's a bit of a sausage factory, so I wasn't a huge fan of that. At that time, I read a book called E-Boys, which was about the benchmark in the States, and I switched across to join eBay UK.
So you switched to eBay because you like the book about e-boys?
Yeah, so I just found it really interesting, and it's actually kind of what I'd hoped to be doing rather than what I was actually doing, which was doing lots of Excel jockeying and sort of just monitoring stuff. I just really didn't like the idea of giving someone £1 million and then taking back 60 grand as a fee straight away. I just thought that was just ridiculous, for example.
You want to do the opposite, presumably?
Exactly. I'd rather be I thought I was too inexperienced to be on the other side of the table. At that stage, I was about 28, I think. So joined eBay, or maybe a bit younger. Joined eBay. I went to see my boss there. Simon was the marketing director. He said to me, I went for the interview, he said, you don't know anything about e-commerce, you don't know anything about technology. You seem like a nice chap, so you can take a 60% pay cut and work for this 22-year-old
So it gets A for honesty and sort of probably C- impact on morale.
Yeah, no, I was like, wow, what a fantastic offer.
Have I got a deal for you?
How could I possibly turn down this amazing opportunity? But anyway, it was great. So I ended up running the team that I was put into eventually with a team of 6. We were doing retention marketing.
And retention marketing for people who aren't retentive means?
So it means all the marketing on the website and all the emails. So as Tom, my colleague, and now the non-exec director of Smart Pension, he's co-founder of Secret Escapes, Tom was on my team. He used to call it the spam cannon. We were in charge of the spam cannon. So when I joined, there were about 40 staff at eBay UK. When I left, there were hundreds. PayPal was massive. Skype had been purchased. Gumtree was purchased. Shopping.com was purchased. I reported to the marketing director directly because our team was quite small. At that stage, they could spend as much money as they wanted on the internet marketing, acquiring people. They didn't really care whether they retained them. So therefore, it was brilliant because I sat next to Simon and the head of PR would come. We did a TV campaign. They'd all come and sort of talk to Simon, and I was on his island. So he would then brief me. So I had a little MBA on the internet, and that was great. And then eventually I felt that it was time to do my own thing. So I set up a business called Arena Flowers. Arena has been going now for 10 years this year.
And I remember, so just to stop this sort of the eloquent flow, which of course is the thing that hosts shouldn't do, but never mind, that's life. I remember back in the day when the first sort of video games came in, there was one called Asteroids, which literally was, people may not have come across it now, which is a little triangle which moves around and these rocks are about to hit you and you just keep trying to sort of move around them and you sort of try and shoot the rocks and they break up into smaller ones and once the smaller ones then they disappear. This was actually prompted by you talking about your career journey from Indo-Suez to eBay and then to Flowers. And there was a button there called hyperspace, which is if the ship was really about to hit the fan, you're going to be squeezing all sides. You press this hyperspace button and then you appear somewhere randomly and totally different, and your career journey seems a bit like that. So how did you sort of hit the button at eBay, the hyperspace button, and go into Flowers?
Yes, that's a very good question. So a friend of mine was in the flower space and he had a very random career trajectory. But he was there and he was sort of asking me for advice and said, I want you to work for a company they were going to do a buy and build of flower shops. I said, that's a terrible idea.
It's been done before.
Yeah, it's been done before. It's painful, it's low margin, etc. They then said they were going to sell them on the internet, and they were the first people really to do it in the UK. And I said, that's also a terrible idea. People want to see the flowers, da da da. And then they started selling loads of them, like hundreds of thousands of pounds worth. So I was like, maybe I can join this party. It's one of those sectors where it hadn't been done very well before, so it hadn't been brought into the modern age because it was kind of painful and difficult and chunky. But it's actually very big. It's a couple of £1 billion market. So anyway, went into that space, did a B2C business, we also do B2B, so what's interesting about that sector is that we started doing our own brand, and that still works, but then we also did B2B, so we supply Moonpig's flowers. We took their flower category from about £1 million turnover to many millions of pounds. I can't tell you how big it is, but it's massive.
How many flowers have you sold?
Over millions of stems now.
Millions of stems?
Millions of stems, yes.
In total, of course, not just for your client.
Yeah, last Mother's Day, the business will have shipped 120,000 bunches of flowers over the Mother's Day weekend. 60,000 a day for Valentine's Day, and the relevance that is significant. It's about scalable working tech.
Absolutely, and the other thing that sort of fascinates me about it is that, talking of deepest Africa, I know somebody who does the herb supplies from Kenya to Waitrose. He does the fresh herbs. And of course, fresh herbs, fresh red roses, it's the opposite of sort of the tech world, tech and APIs and websites and all this kind of stuff. They tend to sort of kind of stay there, although they suffer a bit of software fatigue like most things. But actually things like flowers and herbs actually rot fairly rapidly, so you don't just need to be a sort of a cool tech dude who knows what anally retentive marketing is or whatever you're a specialist in. But at the same time, in parallel, you need this vast logistics operation. Obviously Amazon's probably the par excellence, which keeps 1 million flower stems moving in the right place, not getting broken and da-di-da-di. So it must be almost like schizophrenic. It must be almost the opposite skill set, isn't it? There's
a lot to do, so you have to manage. It's a fragile, living product. There's temperature control environment required. There's a logistics chain. You've got to make sure that planes, the airport caught fire 3 years ago in Nairobi. There was also the terrorist attacks. There's all kinds of things that can happen. The Channel Tunnel caught fire, as you recall. There's lots of different things that can happen, so you have to plan for all eventualities, and it all has to sort of line up to just get out the door at the right time, and it all has to flow nicely.
It's like a military campaign, isn't it?
Yeah, so my dad, when I was a kid, there's the Leyland factory in Kinshasa had assembled Land Rovers, and so he had you'd start with an axle at one end, and then you'd end up with a Land Rover being driven off. Yeah. And there's a little bit of that, putting it all together in the right order at the right time, making sure it's done cost effectively and all the rest of it. And had you had any prior experience with this logistical thing, or are you just a complete sort of genius who picks up whatever you do? Well, I'm working in a very good team. Well, you can say I'm a complete genius. It's cut long story short. Not a complete genius. No, I hadn't. I mean, I'm very logical. I'm a scientist by background, so I did chemistry, biology, physics. I did, so I like logical things, and so putting things together like that is interesting to me. The key learning of that decade of my life, because we launched it just before the global financial crisis. Great timing. Yeah, exactly. So competitive, discretionary product that people can downgrade to a card if they want to. But anyway, the learning from that was around making sure that everything works, because a bunch of flowers on Valentine's Day, jolly good show, If they arrive on the 15th, not great. So it has to work.
And just came back to the real world, because I never get a chance to discuss the real world, being in fintech and all that kind of stuff. In terms of logistics and sort of Amazon, they tend to sort of deliver pretty reliably, but I always assume that one can't get 100.000% accuracy at anything, really. So what kind of practical accuracy rates are there? I mean, you don't have to quote me one from Marina Flowers, but what kind of practical accuracy rates can people get in logistical chains like that in terms of delivery? 90%, 99%, 99.9%, 99.9999%?
Every Christmas you get Black Friday, you get all the couriers get their heads kicked in by all the big retailers, to the extent where sometimes the retailers do make mistakes, sometimes retailers blame couriers. Amazon's built their own courier network just because they're sick of people letting them down. The reality of it is it's difficult. And you get what you pay for. So there's at the low end, there are people who get about sort of 95 to 97% delivery. At the top end, you're looking at north of 99%. But then again, how do you define that they've actually delivered it? Do they card it? So they then build in systems onto the courier's handsets where they can take a photograph of your front door, or they can use GPS coordinates to demonstrate they were there. So there's this balance between investing a lot in IT and making the thing work, and then actually become uncost effective, because ultimately people want free delivery and all these kinds of
Absolutely. For $1 million, you can make sure your one rose gets there, because you're sending 100 people with one rose in case the other 99 got shot on the way or something like that.
Yeah.
And it's just interesting going back to the interweb thing, because with things like sort of Trustpilot and Checkatrade, I don't know the Checkatrade's in other countries. Checkatrade has revolutionised plumbing. In the old days, I try and find a plumber and I get ripped off and this kind of stuff. Yeah. These days I go to Checkatrade and, I've got 1,000 reviews of this plumber. But in terms of being somebody who occasionally buys things from the interweb, I've never actually seen particularly companies differentiate themselves on the quality of their delivery.
Well, you can get people blame you saying, why are you using this particular courier versus that particular courier? But the reality is we've had difficult experiences with all manner of couriers. At the end of the day, there are always going to be problems of some form or other. Yeah. So you just have to, it's just a question of what's the right level.
So it's got to answer the question, which is that the success rate can be as low as 95%-ish for the sort of the cheaper firms, and it can get to sort of 99%-ish. Yeah. But beyond then, you're talking about different things entirely.
We do quite good things on our system. So when we pack a box to go out, the last thing that happens is it gets scanned, so we check whether it's been cancelled, check whether it's got the right courier, check whether it's the right date. So we reduce some of the errors, and if we outload well, the courier will do a good job. But sometimes that's useful for if someone's been dumped just before Valentine's Day, and that happens. Also, it's a bit more sad. You get like deaths in the family, and therefore Mother's Day flowers arriving. We had one chap who ordered a product we have, which is called an amaze box, which is like a little gift thing that goes.
Oh, this is the amaze box, yes.
Yes, that's our patented product. So I'm officially an inventor. That goes through the letterbox, but it's not a tracked service, so we can't recall it. And he bought two. He bought one for his girlfriend and one for his wife, and then he sent them
the wrong way around.
Yeah, the wrong way around.
Oh dear.
With a photograph, and he called us up. Can you cancel this order? Like, sorry, mate. You're gonna have to stick by your letterbox if you want to stop the postman.
And so his wife was asking why she suddenly got some sexy knickers the first time in 20 years.
Sorry, it's gone out. We've done what we had to do. It's up to you to try and intercept it if you can.
Gosh, so that's the real world. Well, just before we give up the real world and move on to the exciting worlds of pensions, in your sort of spare time, which I'm not quite sure how you have any, but you knew something about connecting eBay and charity, and that did lots of things as well. So
yes, I thought it was going to be skateboards and sort of table tennis tables when I got to eBay. It's actually a very analytical, logical place, and they are very focused, rightfully so, on ROI and making sure your time is best used. Put forward the case for a thing called eBay for charity, so sell a product, donate a proportion of your income to charity. And Simon said, that's a really good idea, but unfortunately you've got way too much work to do, so you can't do that in your main job, but feel free to do it on the evenings. So bizarrely, we put it through, built a business case, argued the case, it then got built, and that's raised like over £100 million for charity now,
wow,
which is a decent number. So
that's really
quite pleasing.
Cool. So your place in heaven is guaranteed?
Or maybe at least my blotted copybook.
Somewhat diminished.
Yeah, exactly. I've got some good bits on there, but that was a very satisfying thing to do for obvious reasons, because it's like, it's worthwhile doing. But it did make me laugh. It's like, yes, you can do it, but just not as part of your day job.
Getting back to the power of your magnificence, in your spare time, you did something which created £100 million for charity, which is pretty good, going back to what you can do with an interweb and a smart brain, which maybe leads us into the main show. So are you still a flower seller in your spare time, part-time, half-time?
There's a very good team that runs that business, so I'm effectively the chairman of it, but I kick the tyres and see how it's going, but I don't run it day to day at all. I still take a keen interest in its success, obviously.
So getting back to sort of pressing your sort of life, career, hyperspace button, so you're busy sort of selling millions of flowers, and then you press the hyperspace button and you start selling pensions. So how did that button press work? There is a link.
It does all loop round, actually, back to my first day ever at work. My first day at work at Crédit Agricole, I had to do a training period on the trading floor, and I thought, for some unknown reason, that wearing a sort of blue corduroy jacket and having floppy blonde hair would go down really well on the trading floor. When I turned up and there was lots of wide boys and zips and sort of, geezers, and I was like laughed out of town with like 300 people stopped working and all laughed at me.
You got noticed.
I quite rapidly changed my look.
Yeah, you don't have blonde flowing locks anymore.
No, I know. Yes, there's not much.
More in my
there.
direction of hairstyle.
Yeah, but the chap who joined the week before me on the trading floor and had the same role of being basically the guy who gets kicked and makes the coffees and sort of standard beasting stuff was a chap called Andrew Evans, who's remained a friend, and he's my co-founder at Smart Pension. And he and I carried on meeting up for the last 20 or so years, or a bit less, to chat and catch up. And I saw him a couple of years ago, and he was saying there's this thing called auto-enrollment workplace pensions. Every single person who's employed in the UK in the private sector must get a pension by law, otherwise their employer can go to prison. And I'm like, this is nonsense, I've never heard of this. Can't possibly be true. Turns out it was true, and about 10 million people will get a pension. And he was at that stage working at Lloyd's, and he had access to their entire SME book, which is over 1 million employers. And he said he couldn't sell this product to them, and it wasn't working because the costs of getting out to meet people and sell this product was simply prohibitive.
I remember seeing something from my accountant. I mean, people who've got sort of service companies like I have will all have got this kind of thing, and I thought, oh my God, some more statist BS, some stuff I've got to do, and of course the accountants will do it for a sort of 500 quid extra, and I just thought, I'm not bloody doing it. So I think I've kind of ignored it, although I think I'll probably just decide I'm not an employee, and anybody who works with me is a consultant or whatever. That probably doesn't work either. But
if you don't have employees, you're fine. So they've changed the rules. They've sort of changed the rules as they've gone along, because it started off with really big companies. It's now down to all the small employers.
Yeah, I mean, it's less than 5 people, isn't it?
Yeah, so everyone's below 30, although next year, it's kind of complicated the way they've done it. They've taken the entire employer population of the United Kingdom and sliced it into sort of even-sized buckets, and it goes till the whole process will be finished in June of 2017, give or take. And then it's just every new employer must set up a pension from the beginning, so as soon as you start a company.
Which is rather ironic, given that it was the UK government that destroyed the final salary pension schemes in the UK, which I was a proud member of in the past, and which was a system which meant that if you'd spent your life working for a company, you ended up okay, and then Gordon Brown's dividend tax had destroyed it. So then they kind of make it sort of compulsory to put another one in place again, at least a contribution basis.
Absolutely, they're effectively just privatising the state and the pension time bomb, as they call it. Yes, the big difference is that historically there was a stakeholder pension, which was a thing you have to offer, but it was optional to be in it. And this is called a workplace pension, and everyone's in it, you're automatically enrolled into it, and then you have to opt out. And that way, it's sort of nudge economics or whatever, trying to get people to do things they wouldn't otherwise do because they're lazy.
Let's keep it sort of simple, because 60% of the audience are sort of overseas and probably aren't that fluent with the UK's auto-enrolment, self-SIP investment contribution scheme, pension plan, recent changes in legislation. So let's say that I'm the London Fintech podcast. I employ 10 people to sit there peeling me grapes and doing a whole bunch of stuff and having sort of charity for podcasters projects in their spare time. So what do I actually have to do, and what do they get, and who pays for it, and that kind of stuff?
So in simplest terms, you have to set up a pension, you have to assess all your workforce, and then depending on their age and how much they earn and various other things, they may or may not be automatically enrolled into the pension. Then you have to tell them they're going into it, and then they have to opt out if they want to, or they'll be automatically be paying into this pension.
So automatically I pay them like £100 because I'm such a nice guy, rich guy, I pay them £100 a week or something, and automatically I take 10 quid out and bung it into pension on their behalf?
Initially it's 2% contribution, and then it goes to 5, and then it goes to 8. What happens is it's quite low to begin with to prevent people opting out, basically. Okay, it's some free money, it's not that much. And then once it's all done in sort of 2018, 2019, they just ramp up the numbers. So the amount of money going into the pot gets bigger. You as the employer have to put in a bit of cash, the employee has to put in a bit of cash, and then the government tops it up as a tax credit.
I see. So there's a little pot of money being created in the London Fintech podcast for the employees' pension fund, as it were, metaphorically speaking, not sort of necessarily directly. So then who in general is managing these little tiny pots of money?
So it depends who you choose. In our case, we have a financial consultant called Barnett Waddingham, who are one of the most well-known in the country, and they are investing the money into legal and general underlying funds. Anyone who's got an existing pension is likely to opt out because they have their own provision, potentially, or have their own sophisticated process. So the people who are going into these pots are relatively unsophisticated. This is probably their first pension, so they're not very keen on sort of Japanese derivatives type sort of, pots.
That's strange. Yeah.
Yeah, it's relatively simple. The whole process is really about trying to onboard a vast number of people in a cost-effective way.
So we're back to logistics again, aren't we?
Yeah, we are.
So let's say I'm London Fintech Podcast and I'm doing this, and I go, oh, blimey, I'm too busy sort of playing with my microphones to get into this. So presumably where Smart Pension comes along is that I'll go, oh, I can't be bothered to do this. Hang on, I remember that bloke at Smart Pension. I go to smartpension.com and I just click a couple of buttons and I pay you a tiny sum of money and you do it all for me or something?
Yeah, so when we looked at the market, I had to look at why the people who were succeeding, because the three biggest players are the UK government, a company which is backed by the Danish government and a very large charitable organisation that's been around for a long time. And they're all free to employers, but their technology is not good and still isn't very good. It's what most people have cobbled together things. So what the opportunity we thought was, and it's proven to be the case, was to not only be very good value, but also to use all the nice bits and pieces that you can find around the internet these days to build a very slick, clean experience. So we use 7 or 8 different APIs. I'm not going to bore your listeners about APIs. I know that you've spoken about them before, and it's very interesting. But for example, I'll give you a couple of use cases. So we use e-signatures, which means that you can sign the document on your phone. We use the due deal API, which means you start typing your company name in, and it will then pull in all the information, sort of the registered address and all that information you need to fill out the forms. We will use GoCardless, who you had the CEO here a couple of weeks ago, and we use them for payments. So again, there's no reconciliation problems. So we've built our own core technology, but where someone else has built something clever, we use that, because why would we bother rebuilding the wheel ourselves?
Stefan Dubois from ex-ante was on quite a while ago, and he's got his own directory of sort of APIs that you can flick through, and I'll have one of them, and I'll have one of them, and I'll have one of them, and you can buy from him. From the other way around, from a company like yours, from a fintech like yours, how do you know what's out there? So let's say, for the sake of argument, you didn't know there was an e-signatures API or something. Do you sort of sack the CTO because actually you pay people like that to know all the APIs? They read API monthly. Oh, so there's a new e-signature out now. Oh, a new release of that. Oh, must get that one. I mean, how do you know which Lego blocks are out there which to build yourself?
Frankly, just Googling. So what we did is we said, what I did is I made a list of every single thing you have to do to create a pension.
Every process, every
step, everything we need to. So then, okay, so how can we optimize this to make it easy? So I'll give you an example. Is that almost every single workplace pension prior to ours used what's called a deed of adherence, which is a legal document where you have to sign it and have it witnessed because it's a deed rather than a contract. There's no legal precedent for a deed being allowed to be e-signed because you can't prove that someone witnessed it. So we then said to our lawyers, they said, here's your deed. I said, I don't want a deed. Go away and think again. We want a contract so I can e-sign it. He's like, oh, actually maybe we can do that. Then now everyone's started to copy us on that. So you look at each bit and say, is there a way of making this easier? And so the trick is, in theory anyway, is that there's an industry which is around saying how hard it is to set up a workplace pension, because then they can charge you to set it up for them, right? Sort of scare tactics a bit. So the theory should be that someone signs up with us and goes, well, what was all the fuss about? That was, it took me 10 minutes, and that's how it works.
And does it metaphorically take 10 minutes then? So in my case where I've got 10 employees.
Actually, you can get it done in 10 minutes. So you can be signed up in about 90 seconds, and then you've got to load your staff. We run the assessments, we generate the letters for you and do all the communications. So it's all 15, 20 minutes work. And obviously you don't have to do it every month, it's a bit of a pain, and you might have some questions around payroll and integrations there and various other bits and pieces. It's not, it's not the most straightforward process in the world, especially when the government's involved. But broadly speaking, yes, it's about as quick and slick as it possibly can be on our platform.
So in terms of coming back to the sort of title of the podcast, how you get sort of tens of thousands of clients out of thin air, so am I deriving from your sort of various stories that one of the things that you give a lot of deep thought to is the logistical, the workflow of any particular process, smoothing that out, reducing the number of components, changing the difficult components in the workflow, and then, for the sake of argument, you pick as many APIs as you can to do all of that, and then just do whatever you need.
Yeah, the bits that are available already, we take. The bits that aren't, we build ourselves, and we do it try and do it in the most intuitive way. We do various bits of testing. We did surveys before we built anything. I did a survey of 100 SMEs and said, here are 20 attributes of a workplace pension, which are the most important, and they were cost, and they were speed of doing it.
So this is your marketing background. So the other point is to market test it, because of course, one comes across lots of sort of British inventors in their shed who've got a great idea for something. Well, it's their great idea, and it may be a great idea, but it doesn't mean anyone's going to buy it.
Exactly. A product in search of a market. Well, the great thing about this sector is we know it has to exist, because if an employer doesn't set one up, he can ultimately go to prison or be fined lots of money. So we know there's going to be demand.
If listeners don't hear from me, I'm gone to prison for not self-enrolling myself or something like that. So then the third thing that you're mentioning here, which is a really key point, which I know from AFS, because loads of people I know spend their life doing sort of regulatory things and compliance stuff, as tedious as that is when something is a must-do or you go to prison, that's a good way of motivating people to actually do something, because going back to sort of sales and marketing theory, there's always a sort of what's the best alternative to doing this kind of stuff. Well, that's actually not the real problem in sales. The real problem is overcoming the inertia, is getting people to do stuff in the first place, not to buy you rather than Volkswagen or something like that. It's for them to buy a new car.
Yeah, true, agreed. I mean, the challenge is they have to do this, but there is a government alternative. So the challenge for us, probably the hardest challenge, was around why would they choose us instead of choosing the one which is backed by the government. Now, the government product was created because you can't threaten someone with prison or massive fines, £5,000, £10,000 a day, if there's no product for them to buy. So that was kind of a lender of last resort equivalent for the workplace pension space. But it's actually really quite expensive for the employee. The government's actually allowed to be more expensive than anyone else for bizarre reasons. Primarily because they have a £600 million loan to repay, the Nest has to repay to the government. So it's one, expensive for the employee, but also it's not got any nice technology to make life easier. They haven't really thought. So it's basically a pot where the money can go. So we've had to go, okay, yes, there is this government one, but it's not great for your staff, and also it's going to be a massive pain to do it. So it's not so much, we know the demand's there, but it's diverting it towards us versus from the government. That makes sense.
So all the things you've mentioned are very good, of course, by definition, in theory and clearly in practice, but 75,000 just seems to me like a hell of a lot of people to sign up in a couple of years.
Yeah, if you look at the window, you can probably see Wembley over there. And so we were quite pleased. We were pretty much close to filling Wembley. We haven't got to the Olympic Stadium yet, but that's our next.
So what on earth are you going to do after 5 years? You run out of football stadium in London?
Exactly. Run out of analogies or stadia to fill. Yeah, so we took a view that the volume of employers requiring to sign up to auto-enroll was going to be so vast that they couldn't all be advised by advisors. And we're the only company that's taken that view. And so we've built it so that we've gone through the traditional digital channels of, PPC and SEO and, referrals and these kinds of things, PR. And also we found a lot of success with literally sending letters to employers saying, do you have to do this? If you do, come to us. Email marketing, for example, in my eBay days, email marketing was particularly effective. And in the flower business, it's very effective. You send a thing and you buy a £35 bunch of flowers. Actually, that doesn't work very well in this market at all, because I think it's a serious business setting up a workplace pension. So if you just get an email from me and say, hey, come around and do that, that's like, who the hell are you? I'm not doing that. A letter where you have a space to lay things out works quite well. I know from our agency, who've done a phenomenal job with a bunch of different clients, that there's quite a lot of fintech businesses are having a lot of joy in spending money on stamps and sticking things in the post, because it works remarkably well for products where you have to have a little bit more gravitas, and that's ultimately the requirement here.
The one I see all the time, and people outside fintech see all the time, and it always makes me wonder how desperate they are, is Funding Circle. I mean, everybody I know, again, who's got sort of individual little company, gets some letter from Funding Circle saying, oh, you're pre-authorised to borrow £500 million or something. And they go, what, if they want to lend me £500 million, how much is their credit analysis worth? And all that kind of stuff. But the implication, as one keeps getting these things, is that those direct mail marketing channels perversely work. And of course, the perversity is that you've got these sort of hot, sexy, new interweb generation things going back to direct mail campaigns. But I guess what works, works. So, talking of old school channels and talking of what works in terms of marketing, what other ways have you used in terms of old school? So
I said a minute ago we'd had the view that the direct market was going to be the main bit. We realised actually once we got into the market that the advisor channel, so accountants, bookkeepers, payroll bureaus, IFAs, was not sewn up at all, because they were all dissatisfied with the technology in our competitors' products. And so the one thing when you start a business, my limited experience, is that it never develops as you expect it to. The financial model is never followed. And we realized quite quickly that, sort of back end of last year, that actually we could build a biz dev team and have people going around, meeting people face to face, getting them to then onboard their clients. And so then we built an advisor platform. It took us about 3-4 months. It allows advisors to scalably put on thousands of clients if they want. And that's been really successful. So we signed up 1,000 advisors, professional advisors, in about 10 weeks from launch with very little marketing.
Wow.
So that was really interesting. So that was a good example. Andrew and I, we were chatting. We said we need this. We were looking at that corner of the room. There were 2 people there. It was working. We said we need to make some big bets here. And the big bet of that quarter was to hire 15 people into that team. And they are now fanned out across the land doing old school shoe leather work, but doing a really good job.
That's amazing. And I think it comes back to the original question that I asked you in terms of some of your businesses really bridging from the interweb tech API world to rotting flowers if you're not careful on the other side. And maybe one of your particularly unique fortes is being able to do both sides really well, because the vast majority of fintechs tend to have bought into this very tech philosophy, paradigm, or what you want to call it, that everything's got to be done with APIs kind of stuff. But actually what you're demonstrating as a successful entrepreneur, and other people being on the show, like John Rigg, and one of the angels who behind Platform Black, who's, I think, 4 times gone from 0 to 1 to 10 to 100 and sold it and then started at 0 again. I think the one thing I pick up from guys like that is what works, works.
Yeah.
Don't have some kind of religion around, it's got to be all tech, and all that kind of stuff. Or vice versa, going back to my investment management days, when everybody's buying growth stocks, well, look at the value stocks, because they're getting relatively neglected.
It doesn't matter what it is that's working. If it's working, put more money into it. So it's kind of our approach, really. There may be a point where actually this channel gets maxed out, and then you then go, what's the next one, and what's the ROI, and what's the CPA, whatever. But with the techies, it is always a challenge because there's quite a lot of back office stuff around managing your own pension, administration, all this kind of stuff. They love all that stuff. So I have this constant battle of hauling our CTO, dragging the team to actually build some of the front-end stuff that brings us new customers rather than just making the whole thing work really nicely. Techies love making things work really, really nicely in the background. So that doesn't butter any parsnips, as Andrew would put it.
Indeed. Well, that's why a million years ago, that's how I sort of started off, and it was always sort of more interesting doing the sort of complicated things than actually sort of just doing the boring stuff, which makes you money. Yeah, exactly. And I think the other thing that you've clearly done here is you've carved out this small niche where there isn't excessive interference. I think a statistic I may mention before, which is that in 1992 there were 3,000 pages of legislation around pensions legislation regulation, and there's now 80,000 pages. So getting into the whole pensions thing per se, going back to clever techies who like solving problems, there must come a limit, and I'm sure the limit is well short of 80,000 pages, of what any business can actually assimilate and sort of regurgitate.
Yeah, and absorb. So we had Matthew Hancock, who at that time was the Minister for Small Business, come and visit us. Part of my approach to the marketing piece, that's one of my areas, was to try as very hard, very early on, to get some credible people on our website, so that, because the one thing you can't invent is 200 years of history, like Legal & General, the rest of it. We're a new company, who the hell are you? So we were fortunate enough to get him to come and visit us around the time of the last election. And then we were chatting about this. There's a book of 400 pages, which is like all the rules. And Sam was sort of saying, I've read this whole book.
Sorry, that's just on self-enrollment?
Yeah, exactly.
400 pages?
Yeah, it's a 400-page book of all the different rules. And then Sam, our CTO, was saying, I've read this book, and sort of slightly showing off to the minister, who then said, well, actually, I wrote the book. And so it's like, but we then showed him a 90-second video we'd done, which explains auto-enrollment to SMEs. And he goes, that's the most succinct explanation of auto-enrollment that I've yet to see. I was like, that's quite pleasing, because he's the minister in charge. It's easy to do a 3 or 4 minute video. It's quite hard to do a 90-second video. But yeah, so what we try to do is distill that down so that we do the legwork so you don't have to.
Yeah.
Was our approach.
No, well, it's clearly a brilliant idea. And so where are you kind of going from here? Because as you explained, auto-enrollment kind of needs to get done, and then after a while the stuff to be sort of turned over every month and that kind of thing. But after a while, quotes, you've done that, you've ticked that box, you've done UK auto-enrollment, you'll sort of pack up and go home, or? Yeah,
no, so there's a few strategic options for us. The really challenging thing about this business is that you've had to do multiple different rounds of funding and prove that we're actually getting the traction that we can demonstrate we can get the next one.
It's like a self-built house, you mean?
Yeah, well, it's just like if you suddenly stop doing it, if you stop getting progress, suddenly the rug is pulled out from underneath you, because we don't expect in our plan to make any money until the contributions go up, which means we burn cash every month. And every month there's a new cohort of people staging and how we're doing against that cohort. So that's quite stressful. But fortunately this year, just recently we just closed a round with Legal & General invested, so we have like a good chunk of money in the bank. We can now sort of look beyond the next fundraising.
And how many staff are you?
February of last year we had 5 staff, and we're now 50.
50? Wow, so that's a tenfold.
Yes.
I'm good at maths, aren't I?
You nailed it. So it's been busy. But I mean, we're kind of at the level where we might add a few more people, but not many more. So the options for development are different products. If I'm in charge of your pension and you're satisfied with our service, then it's not beyond the wit of man to sell you an ISA. If you're an employer and we've solved this problem for you here, obviously we can potentially solve that other problems for you in a similar low-touch way. There's also the international expansion piece.
Are other countries going to self-auto-enroll, i.e. privatise their pensions?
They are. Nearly all developed economies may well at some point do this. So it started in the Antipodes, the Kiwis and the Australians. Germany's talking about it. Turkey's talking about it. Various different American states are talking about it. So there's interesting opportunities internationally. But right now we're focusing on the core bit of getting this next 2 years' worth of work done properly.
Yeah. Well, anybody that can go from French agricultural banking to eBay via charity into flowers and the smart pension is not going to be a big stretch to sort of slightly amend the sort of pensions direction.
Yeah. I like to think of it coming full circle back to my finance career at the beginning.
Absolutely. So we've spoken a little bit about the sort of future of what you guys are up to. Is there anything else you want to sort of get the flag out and sort of wave it shamelessly at?
I think it's not so much waving flag for ourselves, but I think was an interesting area of recent development in the space is around the government provider. So Nest was created for...
Nest what?
Nest it's called. Sorry, this National Employee Savings Trust, I think it's called. It's not the Google thing that tells you how hot your house is. So Nest was created as a lender of last resort, equivalent for the pension space, but recently the government is saying, should they be doing other products in the market? And they burn about £18 million a year, which is a vast amount of money to be burning. And they have a £600 million allowance in total. They're nearly up to £500 million spent, and there's no sight of them becoming profitable anytime soon. And so the argument is the government wanting to potentially allow them to go into other areas to try and get their loan back? It's a pretty hot topic in the pension sector, albeit not necessarily in the wider UK environment. Because there are a number of people in the space.
Burning your nest, I guess.
I just don't think that there's a place for sort of vast expansionist policy from a very unprofitable business. If they can afford to lose 80 million quid a year, then they can steamroll into spaces where they are not required. The market's not failing. So that's the hot topic in the space at the moment. Personally, I'm of the view that they should not be sort of gallivanting off in all.
Taxpayers shouldn't be subsidising people to compete with you.
Exactly, and frankly, very well put. Yeah, there's that. I think also the other interesting thing is that with the low interest environment where we find ourselves in, or interest rate environment, equity's not storming well. The contributions will go up to 8% at maturity in this space. In Australia, they started at 3, went to 12, and now they're talking about putting the contributions to 18% of a person's salary. So I think that the reality is, unless this is 8% at the moment, and unless it goes to sort of 15 or 12, 15, maybe even higher, no one's going to have any money when they retire. And there's other things around equity release or around nursing home care and insurance.
Yeah, it's all a bit screwed at the moment.
Yeah, the DWP, the Department for Work and Pensions, is delighted with the successful auto-enrolment. It's turned the graph so that actually the tide has been turned, but by no means has the problem been solved. So I think that's going to be really interesting in the next sort of 5-10 years as to how the whole thing evolves.
That's cool because, it relates to a strategic point that John Kay was making when he was on the show a few ago, which is that one of the areas that sort of financial services and fintech are failing the people is on providing for people's long-term financial security in a different way, including things like nursing homes and equity release and all this kind of stuff. And in many ways, certain parts of fintech is just sort of photocopying and slightly sort of tarting up existing practices. So, online investment managers tend to invest in exactly the same old kind of stuff and say, are you high, low or medium risk? And, and do you want to be equities or bonds? And da-di-da-di-da-di. Well, there's, as you say, the actual life challenges that people face these days as they go through time is something that really needs refactoring. So just wrapping up, well, I'm sure that amongst the sort of over 1,000 listeners in the UK listening to the show today, there will be some who should be auto-enrolled or auto-enrolling or something, and clearly those guys should check you out pretty promptly.
Yes, so I'll do my pitch. So we're fast, secure and free, so don't cost the employer anything.
Fast, secure and free?
Yes, so the employer doesn't pay anything. We charge the employee a very simple, transparent fee. Our website is autoenrolment.co.uk. Quite pleased to buy that. The guy who sold it to us originally wanted £250,000 because I think he was going to get a big payday from a big FTSE 100 company. Anyway, we got it for him for a lot less than that. And we're at autoenrolment.co.uk, happy to help. We are undoubtedly the best solution in the market for any SME that needs to auto-enroll, so they should come to us.
Clearly you are. And when you say you've got autoenrolment.co.uk, I thought presumably that's 2 L's. You presumably also have the auto-enrolment with 1 L, or have I got my L's mixed up?
We've got both of them actually.
All right. For people like me who can't quite remember how many L's.
The correct spelling is the single L. I've actually got a cheat sheet for my team explaining how to spell auto-enroll and enrolment and enrolling and enroll, because it's all very weird.
There's a huge range of websites capturing typos around that. Well, the time's absolutely shot by. I didn't want to give an executive summary at the end because I think these ones where people are sharing wisdom, I think the sort of summary rather sort of kills it in the way that you sort of pin a butterfly in a cabinet and you say, here's a butterfly. Well, it's no longer a butterfly, it's dead. It's static, so I didn't want to sort of summarise. But clearly, you've got a lot of the sort of keys of success here, which you've shown many times, and you're too modest to say that, one of them, which I actually sort of heard in the context, which is that you're very... Oh yes, charming and motivational, that was it, yes. Sorry, the first one's totally slipped my mind. I've remembered the propaganda now. So anyway, thanks for that, Will. And not only do I look forward to the growth of Smart Pension until you're the sort of modern Amazon, but I'm deeply looking forward to the next press of the hyperspace button and see what you're going to revolutionise next. So thank you very much and every good success for the future.
Thank you very much.
Thanks for listening. If you enjoyed the show, please subscribe on iTunes or your podcast app. Or sign up at londonfintechpodcast.com for email alerts on new episodes. Live long and prosper.
We could sit in a bend there all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moon ride, watching a happy moon ride. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, the mountains and the trees. Can you see what I mean? Can you see what I mean? And we fade in between the earth and the sky. Kiss the city goodbye. Wave the city goodbye. Wave the city goodbye. Wave the city goodbye. Watch the firelight dance with me. 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 Watch the firelight dance.